3 times in the last 100 years, the stock market did this. It soared to record highs, then collapsed, and wiped out almost everything. Just look how far it fell each time. And every single time, it began the exact same way, with investors borrowing a fortune to buy stocks. In 2026, that borrowed pile just hit an all-time record, $1.42 trillion. More than the entire US defense budget. So here's the only question that matters: does this year join the list? First, why borrowed money is so dangerous. It works like dominoes. Stocks dip, and anyone who bought with borrowed money is forced to sell. That pushes prices down further, which forces even more selling. A small dip snowballs into a full-blown crash. That's the trap. And it's all aimed at the same target. Almost all of that borrowed money chased the same handful of AI giants. The 10 biggest stocks are now about 40% of the entire market, the most top-heavy it has ever been. If they crack, everything cracks. So, a record $1.42 trillion. Terrifying, right? Here's the twist: on its own, it shouldn't scare you at all. The market grows almost every year, so the amount people borrow hits a new record almost every year too. The scary headline number, by itself, is basically meaningless. What actually matters is how big that borrowing is compared to the whole economy. And that's where it gets real. Before the dot-com crash, it was 2.6%. Before 2008, 2.5%. Today, 4.5%, higher than before either of those crashes. And it's growing twice as fast as the market itself. So, is the market about to crash because of all this borrowed money? Honestly, no. Not on its own. Margin debt is the fuel, not the spark. A crash still needs a trigger, a shock, a bad earnings season, a wave of panic, and nobody can time that. Leverage like this can keep quietly building for years before anything breaks. It could snap next month. It could run all the way to 2028. But here's the part that matters. When that spark finally comes, there's more borrowed money than ever deciding whether it's just a dip, or a disaster. The bull market is standing on a ladder of debt, taller than it has ever been, and everyone is quietly hoping nobody looks down. So what's your call? Does 2026 make the list? A crash is coming? Or is this just fear talking, and the bull keeps running? Tell me why down in the comments. And if you want to see the hidden machinery behind the markets, one clear breakdown every week, subscribe to Planomics. Like, share, and I'll see you in the next one.